Hello, everyone. Welcome to this special ThinkMarkets webinar, Habits and Skills of Successful Traders with our guest all the way from Canada. So I appreciate you waking up very early there, Jody Samuels. Now, Jody, for those who don't know, is one of North America's leading trading coaches, authors, former JP Morgan trader, and she has over 30 years experience. So we are privileged to have her join us today. And as I mentioned, we appreciate you getting up so early Canadian time, Jody. Jody is currently the CEO of the FX Traders Edge, and she spends a lot of her time now helping and training traders from across the globe. I know Jody has a big following here in Australia, so welcome, Jody, and we'll hear from Jody shortly.
Thank you so much, Harley. And it's so good to be here. Go ahead. Sorry. Still have more to do. Okay.
That's okay. Yeah, we'll hear from Jody shortly with her presentation. Before we get going, obviously ThinkMarkets, we're a regulated financial services company, and so we're required to display our risk disclaimer and also our license details. So they're here. Our PDS and financial services guide, etc., can be found on our website, thinkmarkets.com. Okay, so today we'll cover off an introduction to ThinkMarkets. Also, obviously, Jody's got her presentation, Habits and Skills of Successful Traders, and we'll have a Q&A. Okay, so for those of you who are unaware of ThinkMarkets, we're a leading global FX and CFD broker. We're founded around about 10 years ago. And as I mentioned, we're regulated, and we're regulated in a number of countries, including here in Australia, plus also the UK, and we've got offices across the globe. So why do our clients choose us? We've got dealing spreads from as low as zero, over 1,200 products covering FX, indices, share CFDs, commodities, and more. The range of products that we offer is huge, so you're not going to be stuck for choices on things to trade. And obviously, there's a lot of markets that are moving at the moment, so there's plenty of opportunities. We also offer fee-free deposits and withdrawals. It's simple, quick, and all our funding options are very trusted. I'm sure you've seen some of the ones mentioned there, Poly, BPay, PayPal, and obviously people can just do normal bank-to-bank transfers. We've got platforms, a range of platforms. So we've got MT4, so it's the industry standard in this space, MT5, but we also have our own proprietary trading platform as well called ThinkTrader. So if you haven't checked out ThinkTrader, you're welcome to open up a demo account, either via our website, or you can just go to the App or Play Store and just search for ThinkTrader and get a free demo there. You can use EAs, expert advisors. I'm sure a lot of you are familiar with EAs, and that's something that we allow on our MT4, MT5 trading platforms. As I mentioned earlier, we've got strong regulation. So here in Australia, we're regulated by ASIC, and we offer first-class support around the clock. So whenever the markets are open, we'll always have support as well. Okay, now I'd like to introduce everyone to Jody. So again, a big thank you for Jody for waking up so early in the morning Canadian time to do this presentation. Originally, it was going to be an actual face-to-face seminar in Sydney, but with all the travel restrictions put in place, Jody's had to remain at home, and she wasn't visiting Australia, so we turned this into a webinar. So again, I appreciate you taking time to do this, Jody, and I'll hand over to you now, Jody.
Thank you, Harley. So I'm really, happy to be here. Yes, as Harley mentioned, I was planning a really beautiful trip to Australia with my family, and I was also going to have the opportunity to meet you in person. I love to meet traders. And circumstances have it that we're doing this as an online webinar, which is great. So I'm really happy to be able to share my experience with you at this, it's still a very special event. I love what I do. I manage my own business, as Harley mentioned. I speak to groups of traders like yourselves, and I trade. So what I'm going to be talking to you today is about a topic that I'm very passionate about: how to help traders reach their full potential as traders and reap the rewards that trading brings. And this is what my book is all about: the 10 habits, the Trader's Pendulum, the 10 habits of highly successful traders. It gives you a practical foundation to building your trading business, building that trading account. So are you spending too much time spinning your wheels without making progress? Not sure which techniques to apply? Do you want to waste less time analyzing the markets and more time taking profitable trades? In today's session, let me help you to see a clearer vision for your trading business by sharing with you what I think are the top 10 habits for you to develop in your trading business, straight from my book. And at the end of my presentation, I'm going to share with you a way to stop spinning your wheels and waste less time analyzing the markets so you can take more trades that make sense to your bottom line. There are 3 types of pendulums: the market pendulum, the financial pendulum, and the emotional pendulum. I'm sure you have experienced all of these pendulum, because all traders ride on a pendulum every day, and unsuccessful traders ride the pendulum back and forth with no real idea of the pendulum swing. And successful traders realize and recognize that the pendulum swings, and they ride it mindfully. And as a result, they make better decisions and better trades. Mindfully is a key word in today's markets, as the markets have increased their volatility. It reminds me of when I first started trading in the 80s. That's the type of volatility that we're seeing. And it gives us a lot of opportunities. The market pendulum is swinging back and forth, but that gives us a lot of opportunities. The pendulum factors represent 2 situations arising from trading the markets. So on the one end, there is one thing happening, and on the other end, there is often an opposing thing going on. So ideally, as a trader, you want to remain or get back to neutral position, because staying at either end can be unproductive. However, when it comes to the market pendulum, that can give us opportunities at the extremes, not to go with the trend, but to go the other way. And you catch my drift, because those are the types of markets that we're in. So with the market pendulum, let's just talk briefly about this one. The market trades up and down all the time. On the ThinkMarkets platform, you will have access to currencies, you'll have access to stock indices and other CFDs. So you see what's going on in all of the asset classes. And skillful traders know when to enter and exit a trade. They've learned how to recognize the swings in the market and not to enter trades after extreme and exhaustive moves, but perhaps to go the other way. They readily understand the market cycles and will enter after corrections. So you all know about Fibonacci. Now I am a market cycles person. Elliott wave is my niche. So I'm going to talk to you a little bit about that today as well. The market pendulums are the trends and the corrections. To trade the market pendulum, you do need to have a strategy which you can use to trigger your trades and exit your trades. And as I mentioned, I use Elliott wave analysis to ride the market pendulum. The financial pendulum: making money from trading is not a one-way street. I know that you can all attest to that if you are trading real money. On the one end, there are times that you make money. On the other end, there are times that you lose money. But both winning and losing money are part and parcel of trading. And every trader loses money, even successful traders. But it's important not to bet the ranch, so that if it is a losing trade, you lose the entire account. That's why we manage the money in the account so that when you win big, bigger than when you lose. That's a profitable trader. Letting your profits ride and cutting your losses small. Because if you cut your losses small, you can have a lot of little losses that can add up to a more profitable trade. The emotional pendulum. This is best described, I like to describe it on the fear and greed continuum. So on the one end, you have the desire to earn more money from your trades, and you might enter greed territory. So greed territory is maybe taking larger positions because you've had maybe a few winning trades, and then you take that third trade and you take a bigger position, and then of course it goes against you. So it's all a discipline not to do that. But on the other end, you're in fear of losing money, and your actions might be held back by fear. And perhaps you've had a few losing trades, and then you don't take the trade that is a setup from your strategy, and you miss that opportunity. So learning how to balance between these two factors is the focus of you as a trader or investor. So here are some emotional pendulum scenarios, which I have a bunch of scenarios running through my book, so I've just picked up a few of them. Fear versus greed seems to be the catch-all. It summarizes all the emotions below it. So some of you may have experienced self-doubting versus overconfident. If you have, you can just type a yes in the box, in the chat box, so I can see that you're relating to this. So self-doubting versus overconfident, cautious versus reckless trading. Some of you might be organized in your trading, others might be disorganized in your trading. I've just noted that because it really is important to have a structure around your trading. When you open up your trading platform in the morning, what do? We'll get more into that shortly. Flexible versus stubborn, and calm versus nervous. These are all of the emotions that you can experience when you're trading, and it's important to recognize those emotions and temper them if you have to. Work on them if you have to. Patience is really key, and being impatient. Patience versus impatient. So these are the emotions that you might have to work on that you've experienced trading the markets. I'm sure each of you could make a list of all the emotions that you've experienced trading. So let me tell you about the technical trader's trap by introducing two traders to you, Farah and Fred. Farah and Fred are in the technical trader's trap. They're both out of shape in their trading. They don't have a business plan. They're not making money consistently. They lack discipline. They trade emotionally, and they don't have a trading plan. So they're winging it. They're winging it. They're taking trades. They make some. They lose some. They're very excited by the market pendulum, the swings, the market swings, but they're not very organized in their trading. Now I'd like you to meet, and they are technical junkies in the technical trader's trap. So I talk about the technical trader's trap in my book. It's where they are always looking for the next best system and buying all of these products because some market traders, gurus, have told them that they can't lose from their system. So they're just scouring the internet looking for the holy grail, really. Okay, rather than just understanding that they can be successful with the system, the first system that they bought, as long as they work with that system and have a system. So we're going to be talking about systems and trading plans. Now I'd like you to meet Steve and Stacy, our entrepreneurial traders. Steve and Stacy are in shape. They've done a business plan. They actually make money consistently. Why? They make money consistently, but more importantly, they understand how to ride their wins. They trade with discipline. And discipline is a word, by the way, I don't like using it too much. I'd rather say that you can develop habits, because I just think that's a softer approach. If you do the same thing over and over again as a habit, that develops into discipline, doesn't it? They trade unemotionally for the most part. They're not perfect, and they have a clear trading plan. So they're at the other end of the spectrum. They used to be technical junkies, but they've transformed themselves into successful entrepreneurial traders. And I'm going to show you how Steve and Stacy became transformed entrepreneurial traders. This is the transformation process, the trader's quadrant. So on the left, we have new and experienced traders both in the technical trader's trap. And on the right, we have the transformed trader. So do traders on the left side keep track of their trades and learn from their mistakes? Probably not. Do traders on the left side trade at organized times during the week? Probably not. Do traders on the left side just take trades and hope for the best? Probably. But on the right side is the transformed trader. A new trader can develop good habits and become successful. An experienced trader can learn from their mistakes and become successful. So let me ask you a question. And I don't know if you can type in the chat. I'm looking in the chat. How many of you think that trading looks simple? And how many of you think that trading is easy? How many of you want to know the difference between simple and easy? Well, I'm going to tell you. So what becoming a successful trader is about is understanding the market and understanding yourself. So I'm going to ask you a question, and please write this answer down. If the market were an animal, what animal would it be? If the market were an animal, what animal would it be? Please mark it down. Think about it for a minute. And as you're doing that, I'm going to tell you a story that one of my mentors, Bill Williams, used to tell. Before Albert Einstein died, he wrote to many of his former students and colleagues, and he decided to have a final audience with them in Princeton, New Jersey. He invited about 300 people, and these 300 people got together 3 days earlier to decide what questions they would ask Dr. Einstein. And the story goes that they argued over the important questions to ask him until on day 3, a scientist from Europe proposed that they ask Einstein which was the most important question they could ask of him. The next morning with Dr. Einstein on stage, they asked him this very question, to which he replied, "Is the universe a friendly place?" Before I told you this story, I asked you to name an animal that had the characteristics of the market. So the question is, did you choose a friendly animal or a threatening or a dangerous animal? Many of our students select all different kinds of animals and give reasons for their choices. And my hope for you is that after this presentation, the market becomes a friendly place for you and that you grow as a trader and investor in sync with the markets. So I don't know if you were able to write down your animals, but I don't see. Okay. But you've all written them down. If you hear a voice within you say you cannot paint, then by all means paint, and that voice will be silenced. Vincent van Gogh wasn't well known at the beginning of his career, but he kept painting. So practice builds confidence, and definitely practice on a demo account. Okay, you don't want to risk your real money until you know what you're doing. And by continuing to build new skills and habits, we conquer those inner voices which might stop us. So if you don't have confidence in your ability to learn new skills and habits, who does? So develop that confidence. So let's start right in with habit number 1. Establish a trading business for the right reasons. I'm going to take you through all of the 10 habits. We're going to go through it fairly quickly. I usually don't discuss all 10 habits, but this is a special presentation. I know you were going to come out to see me, so we're going to go through all 10 habits. So take some notes and get ready. Passion helps us achieve our goals and make our dreams a reality. So it's important for us to think big, and which takes us from good to great. You all know some great people. You're great. Everybody in this room is great. Okay, but you need to start with the passion. Are you passionate about trading? That kicks it off, because if you're passionate about your goals, if you're passionate about making your trading dream a reality, you will have a better chance at following through to the end. But more important than passion, or just as important than passion, is enjoying the process of getting there. So develop your habits to follow your trading rooms and your trading rules and your trade plan. Commit yourselves to at least 2 years and do not quit. And avoid the technical trader's trap. Work with what you have, find a good system, and stick with it. There are 6 main reasons why traders get into the trading business: self-management, financial independence, creative freedom, more time, work from anywhere, anytime, passionate about trading. So what are your reasons for learning how to trade? If you know what the reasons are, the bigger your why, the easier the how. When you know why you are doing it, the how becomes that much easier. And these are the most common reasons. And once you have the reason, it helps if you have a passion for what you'll be doing and your heart and mind are in the right place for doing it. So now let's move on to habit number 2, complete a trader's business plan. What should a trader's business plan cover? Well, let me ask you this. When you are building your house, do you think using a plan or a blueprint would make a difference? And when the blueprint is done, what is the first thing that a builder does? That's right, the foundation. So does it make sense that as a builder or architect of your own trading business that you have a blueprint? Well, that's your business plan. Another note on blueprints: everybody's plan to build a house is different. You all have your own vision. Everyone's house will be different, so every trader's business plan will also be different, because we are all unique individuals. So what does it mean to treat trading like a business? Well, for many people, trading is a hobby, and for others, it's a business. So where do you fit in? If you want to make serious money, you've got to treat it like a business, even if it's a part-time business. Some of you are trading full-time, and you need to make it work within your schedules. So there are many aspects to building a business, as all entrepreneurs can attest to. And you might not be an entrepreneur in the traditional sense. You might work for somebody else, but you can be an entrepreneur in your trading business. So imagine if you had a trading business plan, which is your blueprint for success. So why don't you take that first step and make a business plan? So the purpose of the plan is to answer the 4 basic questions: what, how, why, and by when. What are your realistic trading goals and objectives? Define your trading tactics and strategies and the proposed method of action to meet your goals. Why are you trading this year? What are the reasons for your business? And by when will you accomplish your milestones and targets? And think of the business plan as a holistic approach to trading. So think about incorporating your plan into your daily life in order to really make it work. Sometimes trading can take over your life. I don't know how many of you have experienced that. I know that it did for me for many years when I was trading at the bank. I'd be working all day long, and then at night I would have my little Reuters machine, and I would be waking up at all hours of the night checking rates or asking for phone calls from Sydney, Australia, or London, England, or Hong Kong, because we had offices all around the world. And one could say that I wasn't very well balanced in my life. Now I'm much more balanced. So it's important for you to be balanced in your trading life. And it might be difficult at the beginning because I know the excitement is there. So that's habit number 2. Keep away from people who try to belittle your ambitions. Small people always do that, but the really great make you feel that you too can become great. Mark Twain. It's always good for a trader to mingle with other like-minded individuals. The stronger your team, the more successful you will be. It gives you a chance to be accountable to somebody else doing the same thing as you are. Let's move on to habit number 3. So these are just some questions that you can ask yourself in defining your goals. This is, in leading up to your goals. Do you plan to trade full-time or part-time? What time of day will you set aside for trading? This helps in organizing your routine. Do you have specific daily, weekly, and monthly return goals? That has to do with, if you have specific daily goals, you're more likely a day trader. If you have weekly goals, you're a swing trader. If you have monthly goals, you're more of a position taker. And you can make the same amount of money depending on what your strategy is and which time frames you trade. What trading strategy will you employ, and what are the rules? And then there are some other things to look at. And these other things are, what are your non-trading professional goals today? And because it's a holistic approach, we want you to really look at your whole life when you're fitting your trading business into your life. What do you see as your greatest strengths as a trader? What are your strengths? Are you patient? Do you do your analysis before you take a trade? Do you let your profits ride? Do you cut your losses short? These are some of the strengths that you might have as a trader. What do you see are your greatest roadblocks to your success? So these could be the opposite of your strengths. Are you impatient? Do you trigger a trade before it's too soon, and then you have to, wait and watch for it to start to go your way? What's your pain threshold? And finally, do you have a weekly trading routine? I think having a weekly trading routine is really important. You can write it down at the beginning of the week, Saturday or Sunday. You can write down your trading. You can block it off in your trading calendar when you're going to be trading, and what are your hours, what are your trading hours. At the end of the day, if you're a day trader, you're going to want to review how you did. At the end of the week, you review if you're a swing trader. At the end of the month, you review if you're a position taker. This is all part of your routine that you develop. So let's move on to habit number 4. Commit to your education with a trading coach. Have you ever benefited because you took a course or graduated from a program? I'm sure some of you went to college and you've experienced having mentors, having professors. Have you ever had a chance to have a mentor or a coach in another area of your life? Some of you might have a personal trainer. Some of you might play an instrument. So how do successful performers structure their learning in any field of endeavor? Well, successful performers have coaches. They have mentors. So it's important for you to have a mentor or a coach because that can help to keep you on track. Now, I'm not saying to be in the technical trader's trap and to have many and to continue looking for that perfect mentor or that perfect coach. You just need somebody that you can relate to, that you feel has what you want. Success quote: seldom does an individual exceed his own expectations. Success starts from within. Believe you are worthy of trading success. And once you have taken this first step into your own personal belief system, you will have a better chance of succeeding. Let's move on to habit number 5. Understand and exploit your unique trading personality. There are many different trading styles. We already touched on this due to the simple fact that everyone is unique. You all have different trading personalities. Heck, you all have different personalities which are better suited to certain trading styles. So, for example, if you enjoy sitting in front of the screen watching the market action, you might prefer momentum or day trading. Now, also, it's when you're first starting out, it's good to start this way, to take a couple of hours in a day or even 1 hour in a day and just really take a lot of trades on your demo account and start to understand the market cycle, start to understand support and resistance, start to understand the price action. So you might start out as a short-term momentum or day trader and then decide that it's really not your personality, that you really like analyzing the markets, establishing your trade plan, and letting your trade play itself out. So you might be better to swing or micro trend trades. You might set 3 different profit levels, hold positions for over a day, and then you might take 2 to 3 positions in the week. Whereas if you're a short-term momentum or day trader, you might take between 3 and 10 positions in a day. You might have the same results because you're going to be looking for smaller profits as a short-term momentum or day trader. Let's say you're looking for 10 pips per trade, for example, 10 to 20 pips in a day, net profits, maybe more. It depends on how many trades you take, how successful you are, and how accurate you are. As a swing trader, you might be looking for 50 to 100 pips net in a week or perhaps more. As a long-term position taker, you're looking to hold your positions for a fairly long time. Now, in these markets, you might not have to hold them for very long because we are seeing huge moves in a short period of time. It's almost like time is compressing, isn't it? Time is compressing. And whereas before these circumstances occurred, we would set a profit target of, in Forex terms, maybe 100 pips that would really take a week to materialize, and now it's happening in minutes or hours. So long-term positions the profit targets are happening much more quickly. But to be a long-term position taker, you need a lot of mental stamina, patience, and the ability to ride down some drawdowns. Now, granted, the time that you have trading plays into this. So if you're working full time, then really that factors into whether you trade in any one of these trading styles. But you do have to figure this out for yourself. Let's move on and talk about this matrix of trading styles to determine the trading style that suits you. We talked about being a short-term, medium-term, or long-term trader. The other aspect of this is whether we are going to manually trade or trade in an automated fashion. So conventional manual trading is done by trading, discretionary trading. You can also have a system and be a systematic mechanical trader and still manually trade, or you can program your trading platforms for semi-automation. So semi-automation can be anything from setting 3 profit targets and trailing your stop losses once you trigger your trade. That can be semi-automation. You can also use EAs. Harley mentioned that the ThinkMarkets platform enables you to use EAs and that can be for a semi-automated system or a fully automated system. So if we move down to automated trading, it used to be that there were, algorithmic black boxes. Like in the 90s, that's when the black box trading started to evolve, and traders really didn't know what was in this black box. So I am an advocate of automating your trading only if you know what's behind it. There's also a lot of high frequency trading going on by the institutions, so you need to be aware of that. Sometimes we see markets moving because all of these bots and algorithms kick off trades at certain levels, and the market might move a little bit more than it should, or a little bit less than you would expect, because you have a lot of algorithms fading the market at different levels. So you have to be aware of that. But you don't need to be obsessed with that. You do not need to be obsessed with that. The market is a very large market, and you can take your profits out no matter how you're trading. So you need to determine, like if you are an engineer, for example, you would certainly be interested in programming your strategy, at least semi-automating your strategy. So I started out as a discretionary trader at the bank, and that's what I was. I was a discretionary trader. And now I'm moving more into programming. So we are now, starting to program some of our systems, and we're just getting into it. So it's early days, because I do think that any system can be programmed. So this is something just for you to be aware of. Let's move on. Moving right along. Follow a system. Habit number 6. If you look at highly successful organizations such as Microsoft, Amazon, Walmart, you'll find these companies are doing the same thing, the same way, every day with consistency. They have a winning formula. They adhere to it. Ask yourself if you have a winning formula to get that trader's edge. If so, are you executing that formula or system consistently so that you have the confidence in your ability to follow it? In other words, develop your own game plan. You are an individual, your own game plan or system for your trading style and temperament. It's really very important. So let's talk about that a little bit more. As a discretionary trader, you're going to be poring over charts, and you're fully aware of which markets you're trading, which time zones you're trading in, and which time frames you're trading. You might do a top-down approach. You might dress up your chart with indicators, or just look at the price action or the Elliott wave analysis. That's one of the decisions that you have to make. So you still have a system, but there is a human component as well. So you will also have general rules to follow. I think it's important for all traders to have rules, because we all have some things that we want to remind ourselves about following. So setting the rules that hold true all the time. For example, are you in the habit of, getting into the market too soon? So one of your rules might be to watch for not to get in when the market is accelerating, wait for the pullback, right? Another you might also look for breakouts. If you're getting in too soon, maybe you're not looking for a confirmed breakout or a breakdown if the market is going down. So one of the rules would be, don't enter the trade until the market breaks out of its trading range. And it also reminds you to stick to the plan. So one of your rules might be, stick to my trading plan. Now, the entry and exit rules have to do with triggering the buy and sell decisions. And that includes entering the trade, and it includes exiting the trade. And the exit rules include stop losses and profit targets. So let's talk a little bit about setting your profit targets. When we talk about trade management strategies, there are 4 strategies here that go from simple to more complex. And which strategy to choose is a function of the trader's experience. When you're first starting out, you are going to be getting in and out all at once. And certainly as a day trader or as a momentum trader, scalper, you're going to be getting in and out all at once. You're going to be taking your trade and you're going to be taking your profit or taking your loss. The next is to get in all at once and take profits at various levels. Now, this is the strategy that I teach my students. It's called the 3 profit tiers. And I developed this for me because when I found that when I took one position and the market would go my way, I would not want to get out of the position because I only had the one position or I didn't have a big enough position. So I would hold my position and then watch it go against me and then kick myself for not getting out once I had profit. But there was really no way, like there was no way that I was going to get out with this particular position that I had. And then another thing that I used to do was I would get out too soon. So I would take one position and get out of that one position too soon and not be happy with my profits as I watched it continue in the direction that I thought it was going to go. So I developed the 3 profit tiers so that I could get in all at once. I would take 3 positions. I take 3 positions, 2 or 3 positions. I analyze the markets to set my potential profit area. Where do I think it's going? This is what I do before I take the trade. Where do I think it's going? I use my analysis to determine, and then I set 2 or 3 profit levels so that if I hit the 3rd profit level, fantastic. But even if I hit the 1st profit level or the 2nd profit level, I'm happy because I'm locking in profits. So this is what I do. The third is to get into the position at various levels and get out all at once. So that's another way to trade, to add on to your position. Once you're in profit on the first position, you can certainly add another position as long as you're moving your stop loss up on the first position. And then the 4th, which is more complex, is getting in and out at various levels. So you can see that it is a function of experience. And as a novice trader, you're definitely going to begin with 1. And even as an experienced trader, you can do 2, use 2, 3, or 4. I suppose you can use the second strategy, getting in all at once and taking profits at various levels. You can also, I'm not going to go there. It's okay. So these are the 4 different trade management strategies. Trade management is really important in addition to money management. I don't think I touch on money management here in particular, but money management is also key, where you define, how much you're going to risk on every trade. If you risk 1% on every trade, you can have 100 losing trades and still have your, before you lose your capital. If you risk 50% on a trade, you're going to lose your capital very, very quickly. So most traders, risking between 1 and 2% on a trade is perfectly acceptable. If you have more than one position, try not to risk more than 5 to 6% on your portfolio trading Forex. And the day came when the risk it took to remain tight inside the bud was more painful than the risk it took to blossom. So is it your turn to take risk and blossom? Only you can decide, but I'm here to guide you. Let's move on. Habit number 7. We're almost there. Plan the trade and trade the plan. So what is the difference between the trading system, trading strategy, and trade plan? I've mentioned all these terms. A trading system, I like to define that as a collection of trading strategies, because there are some markets that are sideways and there are other markets that are trending. The markets trend a smaller percent of the time in Elliott wave analysis than when they trade sideways. So you can have a collection of trading strategies that you use. So with our system, we have 6 different trading strategies. Some catch the market at the beginning of the trend or at the end of the trend, and others trade the trend. So I like to break it down into trend trades and end of trend trades, quite frankly. So that's how our trading strategies are broken down. And then there would be a third, a sideways market. And you can, certainly by getting familiar with the markets that you're trading, you can easily see if maybe it's in a sideways market on the daily chart, and then you can look to, sell that market once we get up to resistance, or buy it once we get down to support in the sideways range, and then trade the trend up or down accordingly. The trading strategy are entries and exits based on price action analysis techniques and our chart setup with indicators. So this is your trading strategy. You should be able to define what your entries and exits are in general for the trading strategy. Where do you get in? Okay, and we have a number of things on our checklist that we look at to determine if the market is at the end of the trend, for example. And there are other things to look at to determine if the market is in the trend and how you can get into that trend. And then the third is the trading plan. That's the specific set of rules for when the trade opportunity arises. You already have your trading strategy, and you've already seen that you can trigger your trade. So this is exactly the trade plan. It tells you exactly where you're entering the trade, what your trigger is, what the price is, what your stop loss is, and where your profit targets are if you use more than one profit target. So that's the difference. The path to greatness lies not only in our performance, but in the systematic practice we put into the performance. Trading mastery is about internalizing patterns. That's number one. So when I say internalizing patterns, the market is fractal. What that means is you're going to see the Elliott wave patterns, the patterns in the market, trends and sideways moves over and over again in any time frame that you are looking at. So once you start to notice and recognize those patterns, you can begin to internalize them so that they become second nature to you. That's really important that they do become second nature, because then it's easier to see which strategy you're going to implement and what your trade plan will be. So internalizing the patterns, it comes with practice. Rehearse execution skills. It's not only about seeing the patterns, it's about taking the trade and rehearsing the execution skills. Getting the brain wired so that, we've heard of neuroplasticity, getting the brain wired so that you're executing the trades in a timely fashion. You're not hesitating, like you're just going by rote. Trade is coming up. This is my trade plan. I'm going to execute here. Learning from market feedback. Yes, the market is going to tell you how you did, and it's how we react to that market feedback that's important. I used to react like in the 80s. I'm telling you, when I first started trading, it took me a while to not react emotionally to my losses and profits. I had to practice that. I'm a fairly, I can be an emotional person, and the market swings were huge. And if I took a losing trade, it would affect me. Now, I was also very competitive, so I would every day I would really try to make money. And one of my goals was to see how many winning days in a month I could have. And I think the closest I got to 20 winning days in the month was 18 days. That was my best month. So there were days when I did lose money, and I couldn't let it get to me. So we learn from market feedback, but it's how we react to that feedback that's key. We want to try to react emotionally and understand that losses are part and parcel to our trading business. Prepare a trade plan. So that's really important for trading mastery. Now, the trading bladder is something that I'm going to show you. It's a little roadmap to guide you in your analysis, coming up with a checklist, looking for high probability trades, coming up with your trade plan, and doing your post-market review. If you'd like a copy of this, I'm more than happy to send it to you. Just send me an email, jody@fxtradersedge.com, Jody. So this is the trading blotter is what, I mean, I modeled this over what I used to use at the bank. We all had trading blotters, and every morning I would write down stats, stuff about the market, and what interest rates were, what the other markets were doing, what the currencies were. This is something that I developed a long time ago. If you like it, that's great, but I'm using it now to really show you the steps that you can use in your daily routine. You do your analysis, that's across the top. We're not going to get into the individual analysis, but that's across the top. Then you have your checklist for your trading rules. So you have, a couple of different trading strategies, maybe your end of trend strategy and your trend strategy. So you have your checklist, and you can literally check off that checklist to see if it is a high probability occurrence. Like if you have a checklist of 5 items and you've checked off one thing, are you going to take the trade? Probably not. I think you need to wait for some of the other things on your checklist to become apparent. And then to the right is your trade plan. Are you going long or short? What is your position size? And what is the price at which you're taking the trade? And then what's your exit strategy? What's your stop loss, your profit levels? And then you can write down your risk reward. At the bottom, we have the post-mortem analysis. That's the post-trade analysis. That's what it is. What were your feelings before trading? Were you in a good frame of mind? Have your last couple of trades performed well? Are your answers positive or negative? This tells a lot about yourself. It can tell you if you were in the frame of mind to be trading. And then your actual trade planning, right? Did you plan the trade? Did you get your confirmations on your checklist? Did you trade the plan? Was my trade impulsive or based on someone else's tips? Was I satisfied with my results, or did I show regret? Did ego take over? These are just some of the things that can jog our brains to see if, what we're doing, and we can look to change, learn about ourselves and grow and change some of these things. Learn to temper our emotions. And then the actual trade results would be on the right. It's really important to understand our trades, to document it, to see what we did well and what we need improvement on. And this is part of the growing process as a trader. So this is meant mainly to show you all the steps that you will likely go through in your trading business. In a day, if you're a day trader, or a week if you're a swing trader, or a month if you're a position taker. And before we get on to the next habit number 8, let me just show you just a little bit about the market swings and Elliott wave analysis. In red, we have the long term. Let's say that's a daily chart. In blue, that might be a 4-hour chart, and in green, that might be a 1-hour chart, so that you see that the market cycles present differently on the different time frames, right? You might be on the hourly chart looking at this piece, but you don't have the context unless you look at the daily chart to see that we are only in wave 3 of the daily chart and that we're probably going higher. So this is what doing a top-down analysis is all about. This is what I do. This is how I trade. I always look at the weekly chart first and then move down the time frames. And when I spoke about buying on the dip, this is what I this is what I spoke about, waiting for the market to pull back within the trend. We already have an objective, a target. We know the market, or we've done our analysis to see that the market is going higher. So we want to get in on that price action and buy the dips. What's an uptrend? Higher highs and higher lows. That's it. And if the long-term trend is up, the medium-term and short-term trends will cycle through the trends and corrections, giving multiple buy signals along the way. So this is a nice graphic for you to understand the different market cycles on the different time frames. If you're a day trader, you're going to be looking at the smaller time frames. Maybe you're a scalper, you're looking at the 1 minute, perhaps, the 5 minute, the 15-minute charts. But always keep the perspective of the bigger time frame. Maybe the hourly is your bigger time frame. Here's another chart. This just shows you a bunch of moving averages. It's an hourly chart. It highlights the moving averages that capture the broad trends in this market. When the moving averages are pointed up and separating, the trend is in full force and the trader can buy the dip. So this is what the price action looks like in a trend. The moving averages are pointed up. This is an uptrend. And then when the moving averages are twisted and sideways, this is an indication that the market is in a sideways consolidation phase, and it's best to wait for trend continuation before buying in an uptrend or selling in a downtrend. So this is where you would perhaps buy on a break, or trade the sideways market until we break these highs, because this is all consolidation. And if you buy up here, you're going to have, the market will go against you. It's not until we break out of this range that the market continues higher. So just wait for your confirmation. All right, let's move on to habit number 8, and then we'll do 8, 9, and 10 fairly quickly. And then I want to offer you something. Measure your performance. That's habit number 8. Elite performers such as chess masters, concert pianists, study and practice to constantly improve. We keep score to improve. Relentlessly taking notes and practicing. So too in trading. We want to look at our performance metrics in trading. So professional traders monitor their results. Like professional traders, if you're a fund manager, you're going to be listed in Barclays. So measure yourself against fund managers if you want, or just measure yourself against yourself and keep trying to improve. As long as you keep score to improve and define your performance metrics. So take an inventory of your trading business at least monthly. And again, if you're day trading, you want to look at what you're doing at the end of every day. It's important to measure your performance so you can see how you can improve. And the way I do it and the way I tell traders to do it is to just take a screenshot before and after of your trades. The before part would be your trade plan. And the after part would be the execution of that trade plan and how did it perform. I have a coaching client who meets with me once a month now, and he sends me his trades before and after, and we discuss them once a month. Very, very well organized. Trading a stock portfolio. Another aspect of measuring your performance is, we mentioned the monthly performance summary. So this is what would go into it, and summarizing your profits. You might have a trading journal where you're writing notes and posting your before and after trades. You track your risk reward profile. How many trades did you take? What were your winners? How many winners did you have? How many losers did you have? What was your average win and your average loss? And you can get that right from the ThinkMarkets MT4 trading platform or their proprietary trading platform. You can get these stats. And it's important to look at these stats so that you understand what the size of your the average size of your winning trade is, what the average size of your losing trade is, because you can look to improve on that. So in the fourth box, we have an example. A 1-to-1 win-loss ratio is 50% accuracy, right? You can improve your performance by increasing that win-loss ratio, or you can improve your profitability by increasing the size of your win. So if you have a 50% accuracy and your win-loss ratio is 1-to-1, what does that mean? It means that you're going to break even, right? So you need to improve that the number of wins per losses to make money to maybe 60%. But another way to do it is to improve the size of your wins, and then you will be profitable, even with a 1-to-1 win-loss ratio, a 50% accuracy rate. Finally, learn the secrets of successful traders. So what I'd like you to do is to answer the question, you've just now learned the habits. I hope you realize that good habits are indispensable to reaching our trading goals. And it's been said that it takes 21 days to ingrain a habit. So what I'd like you to do is to write down 2 habits which you would like to work on this month. Now, you've just learned all the habits. Write down 2 habits that you would like to work on and commit to working on one of those habits over the next month. So write down 2 and commit to working on at least 1. Do I have your commitment for that? I hope so. I hope I have your commitment for that. That would be great. Okay? Because that's what successful traders do. Now, the final habit is adding balance to your life and celebrating progress. We talked about striving to achieve a work-life balance. We talked about how work or trading can take over our lives. But if we're living by ourselves, that's fine. If we have a family, that's not so fine, right? So it's important to strive to achieve a work-life balance. Trading is a journey of self-discovery. We alluded to that. I'm sure you realize that at this point. You're going to learn a lot about yourselves, and what you find in your trading business is really what you find in your life. So if you're not patient in your trading business, it could be that you're not patient in life, and you might want to work on that. There are many things that you're going to learn when you're trading the markets. You're going to just see yourself as a mirror image in your life, and that's an opportunity. Think of it as an opportunity to learn about ourselves and to make improvements in our trading, in our personalities. And finally, learn entrepreneurial skills and habits to improve the trading results. So that's what we just went through, the 10 habits of successful traders. So learn these habits, commit to working on at least one of these habits over the next month to improve your trading results. So these are the 10 habits. Take a screenshot if you want them all in one place. These are the 10 habits that we just learned. I'll just leave it on here for a minute. Well, you'll get the access to the presentation. You'll get the recording. So now it's time to get started on your trading journey. We just learned the 10 habits of successful traders. Learning them will help you save time and effort, make more money, and achieve your full potential as a trader. So it's important for developing your habits. I want to thank you for being here, and now I want to have the opportunity to share with you a bundle that I put together for you. I told you that I am an Elliott Wave person. That's what my business is all about. We do have a full program, but I'm offering you the Elliott Wave series, which is the first part of our program. It's a full course. It comes with 9 modules, and it also comes with the live webinars that I did to go through the modules. So it's a lot of course. It's a lot of modules that you can learn from and really learn about the market cycles and see how you can include them in your trading. So part of this bundled offer is getting access to our Elliott Wave Desk Full Access, which renews monthly at $75. The total value of this package is $675, but today I'm going to offer it to you for $297 for the Elliott Wave course, plus daily analysis on 20 different markets for 1 month. And this is the link that you're going to use to access this, wavytunnelpro.com/EWD for Elliott Wave Desk -bundle. So let me just tell you a little bit about the Elliott Wave series. It's the market map you need to kickstart your analysis, get a good sense of where the market is going, and more importantly, find a flow of high probability setups for consistent profits. We go through the trends and how to see the trends and how to trade the trends. We go through the corrections. We explain exactly what the corrections might look like in the market. And then we tie it all together. It's a very, very comprehensive course. I've had students that have gone through this course 30 different times. I'm not joking. I've gotten emails saying I've gone through this 30 times. And we have brought it up to date with the live webinars and telling you what to hone in on and what we think is working, really, really well. So it's really an excellent course. I've really never offered it for this price. I've got to tell you, I've never offered it for this price. We usually sell it for $600. Now, the Elliott Wave Desk Full Access is a way that you can get started right away with daily analysis on 20 different Forex, cryptocurrencies, commodity, and stock index markets, providing the clear context to spot the best setups and make tips week after week. So these are the markets that are being analyzed every day by Juan in video form: the Euro USD, the pound, the Aussie, the dollar yen, the New Zealand dollar, the dollar CAD, and the dollar Swiss. So all of these dollar pairs plus the Euro yen. The Dow, the S&P, NASDAQ, Russell, DAX, FTSE, the 10-year US bond, the dollar index, gold, oil, Bitcoin, and Ethereum. And what you get is a daily report with the Elliott Wave analysis on the daily, the 4-hour, and the 1-hour charts. And you also get a daily video. Plus, there is a bonus Back to Basics seminar, which includes some other things that the Elliott Wave series does not. So it talks about, there's a whole module on support and resistance and using pivot points and a day trading strategy. There's a lot in here. You're also going to get access to our trading signals on SMS or Telegram. And this is also posted in the website. So this is I should post I'm going to post the link here, wavytunnelpro.com/EWD-bundle. So you can just click on that link. And let me just show you what the results have been of the trading signals. So these signals were started in 2017. It wasn't the full year. I think it started in March. And these are just the results in pips. So just know that your money management, your pips, every trader is going to trade these trading signals a little bit differently. So you might not, the disclaimer is that you might not get the same number of pips because you might decide to manage the trade differently. But this is what we got in our live account and when we posted the trades. So 1,135 pips in 2007, 2018 over 3,000 pips, 2019 over 2,000 pips, and 2020 so far 285 pips. So you're going to get the trading signals in terms of the where to trigger the trade, and then we talk about managing the trade, and Juan talks about managing the trade in the daily videos. So I want to thank you so much, and may you have success, truly have success in your trading business. It was really a pleasure to talk to you about the 10 habits of successful traders. Very passionate about that as a coach, and I look forward to talking to you down the road and seeing you in our services and having you, jump in, take the leap, and take the Elite Wave series on your journey to becoming a master trader. Thank you.
Great, thanks, Jody. That was an excellent presentation. It was full of some great information. I particularly liked habit number 6, the follow a system, and yeah, find a good system and stick with it. Yeah, definitely like that one, number 6. Okay, so just following on from the ThinkMarkets side, I know a lot of you on this webinar have an account with ThinkMarkets already, which is great. I just want to touch on a number of recent developments from the ThinkMarkets side. So we've launched a raw spread account. It's the ThinkZero account. So if you have an account and already with us and you'd like to access the ThinkZero account, you can just log into the portal and create an additional account, or even just contact our support team and they'll be able to assist. I've added MT5, introduced negative balance protection, which is very popular at the moment with the volatility, as I'm sure you can appreciate, and just gives traders that peace of mind. I've added PayPal. I know I use PayPal whenever I can. Whenever I see PayPal as an option for paying, I definitely use that just because it's a very trusted way of paying. We've increased our maximum leverage, increased our product range, added fractional contracts as well, so you can trade various indices and the like from as low as 10 cents per point movement. And one of the things Jody touched on there was her 3 profiteers method, and trading fractional contracts is ideal for that, because instead of just taking one contract, you can split it up into smaller contract sizes for entering and exiting, setting different profit targets, even stop losses, things like that. So the fractional contracts that we've introduced for indices have been very popular, and as I said, people can do from 10 cents per point movement. We've also added Australian dollar denominated contracts for our Australian clients, so you can trade things like the Dow, the S&P, DAX, FTSE in Australian dollars instead of doing it in USD or euros or GBP in the case of, say, the FTSE. So you don't have that added currency exposure. Also added an additional VPS service, forexvps.net, and we've removed all our minimum restrictions on how close you can put a stop and a limit. Okay, so in addition to Jody's offer for attendees today, we, as a thank you for joining this special webinar with Jody, we've got a great exclusive offer. If you open up an account with ThinkMarkets, we're offering up to 25 commission-free trades to get you going. This is a great offer, and it's only available for those that are attending this webinar. And if you already have an existing account with us, you can also get access to the free trades by making an additional deposit. We'll email you the details shortly, and you can additionally you can also just contact our support team to get access to the free trades. And for those of you that don't have an account, all you need to do is go to thinkmarkets.com and create an account. Just in the top right-hand corner, you can do that in minutes. There's no minimum deposits. You get an experienced account manager, and you get access to the free trades that I mentioned. So yeah, again, you just need to go to thinkmarkets.com and open up an account there.